All right, in this video, we are discussing possibly one of the most important topics that there is. And the reason this topic is so important is because right now we're in the midst of one of the greatest wealth transfers in human history. And the people that are prepared for it are going to significantly multiply their savings, their net worth, and most importantly, their financial freedom right now. And one of the ways to do that is gold, silver, and gold mining stocks. And so in this video, we're going to be discussing everything that you need to know about investing in gold, silver, and gold mining stocks. In today's episode, I have none other than my good friend, Steve Penny, aka Silver Chartist. And so make sure you hit the like button over on this side right over there, this side right over there to send this out to more people. Special shout out to our channel sponsor, which is Vizsla Silver, one of our silver mining stocks. Now, I want to encourage everyone to really take the time to go through the Silver Chartist newsletter. It is the best free newsletter available for mining stocks. And these are things that have the opportunity to truly change our life financially. And so right there down below, Steve actually has the best free newsletter that I've ever seen. And I'm not just saying that, it really is. So right there down below in the description and comments, right there down below, you could sign up to the Silver Chartist newsletter where he breaks down mining stocks, what he's buying and selling, how to make the most money in this bull market. And it's free. It's right there down below in the description and comments, and you can click the link. And last but not least, Steve, how you doing?
I'm doing great, Jake. Thanks again for inviting me on. It's always a pleasure to come speak with you, connect with your audience, and look forward to these calls. So thanks again.
All right. So obviously, when you do the Silver Chartist newsletter, you know, it's a full-time job for you because you have one of the most comprehensive, people say it's the best. I mean, you hear it all the time. It's the best free newsletter out there. And you go obviously into a lot of depth of everything you need to know about the gold markets, the silver markets, and most importantly, gold and silver stocks, uranium stocks, how to play it, what you're buying and selling. You go through the charts. And for everyone listening, the link to that is in the description and comments right there down below. But if we're given a little crash course here on this video right now, let's start at basically, what is everything that we need to know about investing in gold, silver, and mining stocks?
Yeah, this is such a timely topic because I think there's a lot of new people entering this sector who are brand new to this, and perhaps they don't know where to start. And I like to start by keeping things just very simple in the beginning. And then if you want, you can add layers of complexity to that to potentially amplify your gains. But really, so who should be investing in silver and gold in the first place? And, it's my belief that everyone should have an allocation to physical metal stored outside of the banking system. But, the question to ask yourself, do you distrust the central planners? Do you have any, do you distrust the monetary authorities? Where do you think this is all headed? And if any of those things give you any level of concern, then owning some physical metal likely makes a lot of sense for you. And the simple path, if you just want to get some exposure to this sector, I always recommend by starting with physical metal first, stored outside of the banking system, metal that you can go get your hands on if you need to. And then second, once you've done that, then there can be a lot more money to be made by speculating in the mining stocks. Now, a lot of people are intimidated by, I don't know how to research all these stocks. There's thousands of them, and a lot of them are risky, and that's true. So like a simple path would be to just pick a couple of top tier mining stocks or even an ETF. And then step 3 would be just don't touch it for a couple of years. Now that's the simplest way. And I think that would greatly outperform a lot of mining or a lot of general portfolios out there over the next 2 to 5 years. However, there's things you can do to really even amplify, those gains from that simple strategy.
And the 4th step is to sign up to Steve to the Silver Chartist newsletter. But in all seriousness, let's look at that, right? Because physical gold and silver allocation, pretty straightforward. Everyone's got their own, whether it's 1% or 20% or 5%, who cares? But pretty straightforward. And then based off of somebody's personal conviction, whether they allocate more heavily to gold or silver and whatnot, we've discussed that in previous episodes. But in regards to mining stocks, right? Because this is obviously having the channel and seeing all these comments and stuff. This is what people ask, like, what's your number one silver stock? What's your number one gold stock? Or how do you know what to buy or what to do? And obviously you go into a lot of depth in the silver chartist, and it's based off of your personal goals and such. Mm-hmm. But give us an idea of how does one go about investing in gold and silver stocks?
Great. And if you don't mind, I'll go back to the physical thing because it is so simple. It sounds very simple, and it is. But, a lot of people who are new, this is one of the top questions I get from new members is, hey, why do I need physical? When I can just buy an ETF, and especially with this PSLV challenge, which is great. Don't get me wrong. I fully support that because the Sprott Physical Silver Fund, or Trust, I should say, they take physical delivery of 1,000-ounce bars. And that puts stress on the industrial bars, which is where we really need this to see the squeeze. And PSLV is an awesome vehicle. However, I don't think it should be construed as an alternative for owning physical metal stored outside of the banking system. I think a lot of new entrants to the space are like, hey, PSLV, it's got physical. I can check that box. So I would kind of push back on that and say, PSLV is great. However, you want some physical that you can get your hands on.
So there's a difference between physical and an exposure to physical.
Yes, exactly. That's exactly right. So I just wanted to highlight that point. But as far as like how to structure a mining stock portfolio, I think a lot of people focus too much on the individual stock selection, although that's important. Don't get me wrong. You want to pick quality stocks. But I think even more important would be to zoom out a little bit and decide how you want to structure this portfolio. What weighting do you want to have to the speculative explorers, to the mid-tier producers with exploration upside, or just to the top tier like blue chips that maybe don't have the 10x potential, but they're safer? So thinking how you want to structure that is the first question I would ask myself.
And when you do silver chartist, I imagine one of the things that you get is people on all different levels. Mm-hmm. And so you review everything from top tier, mid tier to micro cap, or the more speculative that have the most upside, correct?
It is. Yeah. So it's, what I do is I show people exactly what I'm doing, and I explain why I'm doing it, not necessarily so that people can go do it exactly what I do, but so they can perhaps see how I think and then make better decisions how they build their own portfolio. And of course, I do individual mining stock reviews and all of that as well.
Now, what do you think are the biggest mistakes people make when they're building their mining stock portfolio? I would imagine, because you get so many questions that are coming into the help desk and stuff like that. What do you think are the biggest mistakes that people make, especially if they're beginner, they're in their first couple years and they say, oh my gosh, this is an incredible opportunity. What are the cautions or important wisdom for somebody?
Sure. And just to reiterate, the first one I see is not having any exposure to physical. I don't want to keep beating that one to death, but it's very important. But the second one would be probably an overexposure to explorers and development plays, the very small caps. And there's nothing wrong with that. If you want to have heavy exposure to those sectors, it's just that a lot of people do that and don't understand what they're getting into. You know what I mean? A lot of people did that. Say you're 80, 90% of your portfolio in these explorers back in August. You saw drawdowns of 50, 60, 70% in your whole portfolio, and people aren't mentally prepared for that, which can cause new people to either sell out too early. And also when you do that, it becomes, makes your exit strategy more difficult, because those things can pop 60% in a day at the end of a cycle and then fall by 70%. And, people are stunned. I don't know what to do. How do I exit? Where some of the mid-tier and larger cap stocks trade a little bit more smooth, and there's still plenty of upside. There's no right or wrong, but these are considerations that people should be taking into account, especially when they're new.
So then from there, it's just being strategic enough to be able to say, here's 2 or 3 great mid tiers. Here's 2 great top tiers that I like. And then here's the developers or the explorers that I really like, that have exposure to silver, that I think can go quantum leaps and give me amazing gains, that I want at the bottom. And you kind of build it like a pyramid, basically based off of your own risk tolerance. And then that goes back to what you've talked about many times in terms of building your own exit strategy and such.
Exactly. Yeah. So personally, I do about 20% of my personal portfolio in the highly speculative exploration and development plays. And what I do is I try and put equal weighting, equal dollar amounts into each of those, and I spread it evenly amongst about 10, because some of them will probably go up tenfold or more, but some of them might, who knows, they could go bankrupt. Those exploration stocks are one poor drill result, one permitting issue away from, a very large drop. So they're risky. But if you have a basket approach with, evenly divided allocations, you're likely to do very well.
As someone who's more, I would categorize on the beginner side, obviously, I've had some good success and things like that, but I know that was my biggest mistake, was an unhealthy allocation between individual stocks. So you said spreading them out. I would imagine that a lot of mistakes that you see, and I see them on my DMs on Twitter, is like someone that is like, really upset that maybe a stock went down because they put 70% of their portfolio in one stock.
Exactly.
And so would you say that's another important thing and why the allocation is so essential?
Yeah, you made that point perfectly. And to kind of piggyback on that, a separate but related issue is becoming married to one stock. Like, you might really like the CEO of a company, or you really like their story. And that's great. But, that can also cause you to become overly exposed to it, or it can cause you to not sell when it's time to sell. So we got to keep emotions aside and, make rational decisions. And I find myself, there's several companies where I just love the CEOs. I love their vision. I love their principles and ethics. And I'm tempted to go way overweight on those stocks. And I can tell already it's going to be emotionally challenging when it's time to sell. But, I'm not going to let my emotions get in the way of doing what's, the most profitable decision.
So anyone that's looking for help for that, right there down below, of course, is Steve's free newsletter in the description and in the comments right there down below. And like I said, I think it's the best free newsletter out there. But let's ask this question, right? Because this is one that everybody has. Am I too late, or the next iteration is where's the places that are still most undervalued? What's your opinion on that with regards to gold and silver mining stocks? What's most undervalued right now?
Perfect. And that's such an important question to ask. So I first started by talking about the simple approach. Just get some physical, a basket of miners, and don't even look at it for a few years. But if you want to add just another step, you can really amplify your gains. And one of the things I really focus on is ratios. And I break the precious metals complex down into 6 subcomponents. So you got physical silver, physical gold, senior gold miners, senior silver miners, junior silver miners, junior gold miners. That's 6 components, right? And I run ratios every week to see what's the most undervalued. And back in March of last year, junior silver miners were just so far undervalued relative to everything else. And sure enough, we've seen junior silver miners outperform their gold mining counterparts by a factor of like 2 or 3 over the past few months. Now, the junior silver miners are still the most undervalued component, and we expect them to outperform over the intermediate to long term, but they're just not as undervalued as they were a few months ago. And the trend is shifting, and there will come a point where, based on ratios, where the gold miners might present a more compelling risk-reward entry point, and we'll be rebalancing the portfolio according to these ratios over time.
Very interesting. So with regards to that, is the most important part of that then looking at the gold silver ratio, or are you taking a sum total of the valuations of silver juniors versus gold, and you're analyzing it that way?
So the gold silver ratio is certainly right at the top of the list. I look at that probably every day, if not every couple of days, and that's certainly one factor. But also,
did you get it tattooed on your arm?
No, I didn't. Thought about it, but no. But so I look at here's one ratio. There's the SILJ, that's the junior silver mining ETF. And then you have GDXJ, the junior gold mining ETF. So I can look at a ratio between the two. And right now, SILJ is still undervalued relative to GDXJ, although it's playing catch up rapidly. You can look at SIL, which is the senior silver mining ETF, versus GDX, the senior gold mining ETF, and see that ratio play out. You can do SILJ versus physical silver and see how the mining stocks compare to the physical silver. And continually watching that ratio can tell you when, hey, it might be a good idea take some off the table on my mining stocks and put it into physical or PSLV or something like that. Now,
if you had $10,000 right now, if you had $10,000 to invest, what would you do?
Assuming I had my physical in place, if I had 10,000, I would personally break that up into the way I do now, which is roughly 30% in the top tiers, about 50% in the mid tiers, and then 20% in the high risk speculations. So that's my personal allocation. And I would do the same thing whether I had, high six figures or $10,000. I would break it up that way personally.
And say that ratio one more time for someone listening that is maybe new to this and wants to present a proper allocation.
Sure. And of course, this is me personally. Everyone's got different, goals and everything. But I do about 30% in the top tier, 40% in the mid tier. I'm going from memory here, but it's roughly 30% in the top tier, 50% in the mid tier, and then 20% in the high risk speculations. 30, 50, 20 for me. And
let's talk about your exit plan. Is it to move profits into physical? And if so, at what point?
So my long-term exit strategy, to put it very simply, the principle is based on gradually de-risking the portfolio as the bull market matures. So de-risking. So that involves swapping from highly speculative explorers to mid-tiers to top tiers, and then from silver to gold miners, and then also from mining stocks to physical in general. So there's many different ways you can do that. But yeah, I think once we get over $50 silver and call it $5,000 gold, the risks inherent to mining stocks become greater, mine nationalization, all these kind of things. So at that point, it makes more sense to have a heavier allocation of physical or some of the physical funds like PSLV. I think Don Durrett was talking about that on your show recently, if I remember correctly, but I agree with that 100%. But for now, I think the biggest money to be made is in the mining stocks. And then once we get over $50 silver, I'll be scaling into more physical and less mining stocks.
So what do you think is the prospects of an equally weighted portfolio compared to previous bull markets?
Say that question one more time.
What do you think in a portfolio that's similarly allocated to the way that you illustrated, what do you think the comparison will be in performance to the previous bull market?
Yeah, that's a great question. I base all my projections on my roadmap based on the average of previous bull markets, just to be conservative. The 1970s bull market and then the one from 1999 to 2011. Now, some people would say that's not a separate bull market, 99 to 2011. I'm not going to argue with that, but I base my projections on the average of the two. And I really think what we're seeing right here, right now is going to be a bull market like we've never seen before. I mean, all the pieces are in place. Back in the 70s, it was more of a U.S. phenomenon. This time, this is a global phenomenon. Back then, how many people could get access to physical silver or even buy mining stocks? Now we've got people around the world with brokerage accounts and stimulus checks to spend. The environment is ripe for not only a reversion to the mean, but a speculative mania in these mining stocks and this sector as a whole in the fullness of time.
What inning do you think we're in? I had someone on the other day that said that the national anthem just ended. What inning do you think we're in?
Yeah, that's a great analogy. But back in August, I probably would have said maybe 3 going into 4, but that might be a little bit much. But we've pulled back a lot. I look at Fibonacci retracement levels, and if you're new, don't worry if you're not familiar with what that means. But a lot of these mining stocks, and even gold itself, is retraced. It's pulled back 60% of the previous run from last year. So we've given back a ton, and a lot of people don't like this pullback. And I don't care for it either, but this is giving fantastic entry points for people who are brand new. So what inning? Probably 1 or 2. It's early. I think we're going to be many multiples higher in the physical prices and even more so in the mining stocks in the years ahead.
Okay, everyone. So comment down below how to spell Fibonacci in the comments right there down below. Winner gets a gold bar from Steve. So what's your assessment then right now on the overall mining stock environment as we kind of come to a close here?
Sure. I love the current sentiment. People are throwing in the towel. The sector is hated again. And my contrarian nature doesn't like it when everyone's talking about it on TV and everyone's got FOMO. Unfortunately, our human emotions often tell us to sell when we should be buying and to buy when we should be selling. And right now, no one's really interested in the sector again. It's back to being hated. And this is the point to accumulate. And I think it's very likely in a few months from now, people are going to say, wow, I wish I accumulated back at the depths of that pullback. Now, there is a little bit of downside risk here. I'm not necessarily putting a stake in the ground and saying we've hit the exact bottom. There's a little bit of downside risk, but I think that is minimal relative to the upside potential. Like gold in particular, downside risk is maybe $100, maybe a little bit more at the most, but the upside is literally thousands of dollars. So you got such small downside relative to the upside potential, especially if you have a 2 to 5 year time horizon.
So when you're looking at a longer time horizon, and then you're looking at the 10-year, which has risen while metals have fallen, what do you think is the play from the Federal Reserve or the government when they are seeing those yields rising? And what are the effect of those yields rising on the overall economy?
Yeah, so the largest driver of the metals markets, aside from the blatant manipulation, is real yields or real interest rates. Now, when people see the nominal rate rise like it has for the last year now, and really the 10-year has risen at a faster clip than it has at any point in the last 40 years. I mean, that thing has just gone almost straight up from 0.4% in March of 2020 to a high of 1.6. So that thing has gone up 400% or fourfold in a short period of time. And the knee-jerk reaction by institutions and retail traders is, oh, rates are going up, sell the metals. But what really matters is real inflation. So if the yield on the 10-year is, say, 2%, but real inflation, not what the government puts out, but real actual inflation is 3%, that's a negative yield. And that's a positive environment for gold. And, it takes a little bit of time for the market to recognize that and for people to recognize, hey, yeah, the yields are going up, but inflation's going up faster. And, I think we're in a transition period where the market's going to start to realize that probably in the very short term here.
I read a funny tweet yesterday. I retweeted it a couple of days ago, and someone said that they said the government's inflation numbers are certainly right if we measure inflation without gas, groceries, rent, the housing market. Yeah. And he just went on and on and on and on. Yeah. And so I guess what my question with regards to that is there a point where people actually realize there is inflation if their numbers are so misleading to begin with? And is it a necessity for these numbers to rise for the metals to move?
Yes, we need to see real rates continue to be negative, and I have no doubt that they're going to be. And the Fed is in a corner here. I mean, they've got two choices. They can prick the everything bubble, like everything's in a bubble right now, except for commodities. So they can allow rates to rise. That's going to prick that everything bubble. They don't want that, because then the blame falls squarely on them and the politicians. Or they can do what they do: yield curve control, Operation Twist, all these crazy schemes that involve effectively currency creation and debt monetization, which would allow inflation to run hot, even if nominal rates continue to rise. And of course, that's what they're going to do. They always choose that. It's just a matter of when. Are they going to be proactive or reactive? Are they going to wait till we see a big market sell-off and then react, or are they going to be proactive?
What's your bets?
I tend to think they're going to be proactive. There's been some Fed speak lately. Some of these Fed governors have indicated that they're prepared to get more aggressive sooner than a lot of people think. I don't know exactly when that's going to happen. We have the Fed meeting coming up tomorrow, March 17th. So we'll see what they say. I'm not really expecting much tomorrow, but I think we'll probably see some more aggressive Fed action sooner rather than later.
So for everyone listening, we have part 2 of our episode coming up, which is going to be on the topic of why do you invest in silver and gold if the market is manipulated? What's the point in investing it if it's manipulated? And so make sure you stick around for part number 2. If you're finding this now, you can go ahead and you can look for that. I want to encourage everyone to join the Silver Chartist newsletter. It's free. It's right there down below. It really is, like I'm telling you honestly, it is the best free newsletter that I've ever come across. And when I signed up, I said that to Steve. I said, Steve, you're giving people way too much in a free newsletter, but it's just Steve's personality. And so you're going to love it. There's awesome macroeconomics, research on the markets, and then, of course, nuanced into gold, into silver, into mining stocks, what he's buying and selling, and all these charts and all these things. He also spells Fibonacci in the newsletter. He also covers uranium as well, which I've gotten a lot of comments from people that are like, thank God, Jake and Steve, that I joined. I've done so well in uranium. And so the free newsletter is right there down below in the description, and it's pinned to the comments right there down below. So if you do one thing for yourself today, go ahead, sign up for that right now for free in the description and comments right there down below. Make sure you hit the like button on this side right over there and this side right over there to send this video out to more people. Last but not least, Steve, give us your 2021 gold and silver price predictions.
Okay, I'm going to go out on a limb here and say I think it's very likely that we see let's call it $45 silver. I was saying 50. I think 50 is very possible. I'll be conservative. Let's say $45 silver and $2,700 gold.
All right there down below. Everyone give your comments right there down below. Steve is a pilot and he will fly you first class, whoever is the nearest winner on the closest to winning this price prediction. And thanks for joining, Steve.
Thank you so much, Jake. Appreciate it.